Hello everyone, and welcome to another episode of Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano. It is the 14th of July, 2023. Right, everyone, let's get into it. So, a big last 24 hours. I can't believe how much actually happened. In case you've been sleeping under a rock, the XRP case with the SEC had a verdict that came out that basically sided mostly with Ripple and basically said that XRP isn't a security. And that obviously has wide-ranging implications for all of crypto, because if the SEC can't get XRP labeled as a security, which in my opinion is probably the thing in crypto, or at least one of the things in crypto that look the most like a security, right? If you were to argue a point, if they can't get XRP listed as a security, then they can't get anything listed as a security in my mind, or at least almost everything, especially not the assets that they have included in their lawsuits against Coinbase and Binance. Now, of course, the markets reacted very positively to this news because it was a huge kind of regulatory weight off our shoulders, so to speak. But as I said, it has much more implications than that. From the lawyers that I've been kind of reading over the last 24 hours, the consensus seems to be that because the ruling was in Ripple's favor and the actual language that was used, essentially what the SEC has done is that they've lost so badly that Congress really just has to act now, because they lost so badly because it basically says that the laws are just not there to properly regulate these things, to properly give these things regulatory clarity, and you can't just go to court every single time you need to, fix one of these disputes, or kind of every single time there's a dispute here. So massive loss for the SEC, massive win for Ripple, XRP, and the wider ecosystem there. And it's kind of funny because I remember saying, I don't know how long ago it was on the refuel, but I remember saying that I believed Ripple would win this case, and it was looking like they would win this case. It had been about 2.5 years to today where this case has been ongoing, and Ripple obviously put forward a convincing case for a judge to rule in their favor on most things. They did rule against them, I think, on XRP sales to institutional investors. Apparently that constituted an investment contract because it was being sold by Ripple Labs themselves rather than people buying XRP on like a secondary market, for example. Now, obviously, that is hugely positive that they did that the judge said that XRP isn't a security because when it's bought on secondary markets, because people aren't buying from Ripple or have no way of knowing if they are or not buying from Ripple, right? That obviously has huge implications for things like exchanges, because Coinbase can now use this as precedent in their case and basically say, well, hey, this was ruled by a judge. This is the summary of the ruling. This is the arguments used there, and it obviously puts Coinbase in a much better position, and Binance too, don't get me wrong, but it obviously puts them in a much better position than they had previously been in when it comes to this stuff. Now, I think that it's kind of hard to tell what's going to happen from here. This is going to trial, I believe. I don't think it's kind of like finalized yet, but it's going to trial, and I'm not across the exact, details of all of this, but I think the most positive thing that's going to come out of this is that there actually is going to be legislation drawn up now because of this, and it obviously makes the SEC look really bad that they lost this case, and it kind of begs the question, like, is Gary Gensler going to get removed? Everyone's been asking that. I don't know, right? It doesn't feel like he's going to get removed, right? But this is a pretty big L. And I can't remember if he was the original chairman at the time that the SEC went after Ripple. I don't know if he either became chairman after, or I think he may have become. Yeah, I think he did become chairman after, because he was an appointee of Biden, and the election was in 2020, the end of 2020, and the case was brought early 2020. So I think he just inherited the case. But the thing is that, like, he continued bringing these baseless enforcement actions against companies within the space, like obviously Coinbase, for example. And it just seems like that the SEC is standing on very shaky ground at this point with their arguments, and it seems like Coinbase is in a much better position now, and so is the rest of the crypto ecosystem. And really, as I said, like, if the SEC can't get XRP labeled a security, then good luck with anything else. And it's funny because when it comes to ETH, as I've said this for a long time, but I'll reiterate it. I believe there was a 0% chance of the SEC being able to label ETH a security, and I still believe it's a 0% chance, obviously. But now I believe, or I think, that everyone else believes that there's a 0% chance, except maybe the Bitcoin maximalists, who are max coping today, by the way, because they didn't they didn't get their way. And I mean, I kind of sympathize with them when it comes to XRP because I'm not a fan of XRP at all. I believe that, I honestly believe that it's pointless. The products that they have just have no product market fit. And the Ripple company and executives have been selling XRP for a very long time and making a crap ton of money off of it. But at the end of the day, if I had to choose between Ripple and the SEC, I would choose Ripple every day of the week, right? I would choose the Ripple winning against the SEC because it is better for the ecosystem. Much better for the ecosystem. The fact that this case has basically resulted in such a positive outcome is something, I guess, like to I guess give kudos to Ripple Labs for the fact that they obviously fought this in court, spent the money, got this outcome, even if I don't like them. So credit where credit is due, I think is important there. But yeah, as I was saying about ETH, there's just zero chance, right? Like the SEC. As I've said before, like who would they even go after when it came to ETH? Number one, and now they've got this precedent of losing against a US-based company that issued a token that very much does look like a security, or very much is the closest thing you can probably get, and they still couldn't get it labeled as a security, right? So yeah, it's a good time to be in crypto, that's for sure. It definitely feels like the regulatory stuff is past us now. It's a massive weight off our shoulders. I do wonder where the SEC goes from here. Do they continue bringing this high-profile enforcement actions against different companies within the crypto ecosystem, or do we finally get progressive legislation out of Congress in the US in order to make sure that the crypto economy can continue to thrive in the US and not have people kind of move offshore or anything like that? We're going to have to see how that all plays out. But yeah, huge win for the crypto ecosystem today. And of course, what was even funnier was that Coinbase and Kraken and I believe Gemini as well, the biggest US-based exchanges, immediately relisted XRP for trading as basically a giant FU to the SEC, saying, yeah, you lost, XRP is not a security, and that means that we can now have it tradable on our exchange. And all those people who were saying that Coinbase and Binance were going to delist all those assets that were listed in the lawsuits against them, and I remember I said that they weren't going to do that. I mean, there's a 0% chance they're going to do that. There'd be no way that they would relist XRP, right? And then go ahead and delist all these other assets when Coinbase lawyers are probably very confident right now that those other assets are not going to be able to be proven to be securities, which means that Coinbase should win their case, because the whole case against Coinbase and Binance, Binance is a bit different, so I'll stick with Coinbase for now, but the whole case against Coinbase, rests on really two things. It rests on the SEC being able to prove at least one of the assets that they listed in the lawsuit is a security, so they have to get a judge to side with them on that, which obviously has now become very, very difficult. And the second thing is Coinbase's staking products, which again, it'd probably be easier to go after the staking products, but still generally very difficult now. Which means that these things aren't going to get delisted in my mind. There's a basically 0% chance here, and it's kind of crazy that all of these, I guess, TradFi exchanges like Robinhood and Voyager, not Voyager, I think Voyager's defunct, Robinhood and a bunch of other ones, they basically delisted these assets, right? They delisted those assets like MATIC and Sol and stuff like that. And the thing is, they didn't need to do that, right? But they did that out of kind of, I guess, caution or something like that. But now they kind of screwed over their customers, because now their customers can't buy those assets, and those assets are some of the best performing over the last 24 hours because of that, I guess, weight, that regulatory weight off the shoulders there. And yeah, I guess it's just a great day in crypto. You can hear it in my voice. I'm so excited for this. I'm so excited that we finally got that regulatory clarity that we have been waiting for at least in some way, because in the US, from my understanding, the way the law works, it works on precedent, right? Where essentially more weight is given to precedent. So precedent in court cases, depending where the court case is actually, depending which court it is. So if it's the Supreme Court or a district court or something else, a lot of precedence is given to that. And that's how US law generally works, for better or worse, right? So because of that, we now have this precedent that XRP is not a security, and we now have all of these arguments that Ripple made to be able to to win that case, and now Coinbase and others can use that, as I explained before, which I consider to be very, very positive for crypto. And last up on this topic is a representative here, Richie Torres, who is a Democrat, by the way, actually going after the SEC himself, saying the SEC is acting like an overzealous traffic cop, arbitrarily ticketing drivers while keeping the speed limit a secret. It prefers to communicate by enforcement rather than by rules or guidance, but that's no way to regulate digital assets. I'm calling for an investigation. So specifically, I believe that Richie is calling for an investigation into Prometheum, that really bullshit exchange that the SEC paraded in front of a committee, basically saying, here's Prometheum. They were able to register with us. Why can't anyone else? And everyone knew that was like a psyops, right? And Richie Torres, who again is a Democrat, which have traditionally been unfavorable towards crypto, right, is pushing for this. So it does seem like we are getting some more support from the Democrats here in the US, which is a good sign, because traditionally it really had only been the Republicans. But I did say that there were Democrats that weren't the, I guess, higher ups like Elizabeth Warren and Gary Gensler and stuff like that, that were in favor of crypto and wanted to protect crypto and didn't like what the SEC was doing. And that's exactly basically what we are seeing here. So yeah, very, very cool to see this. And I guess like congrats to Ripple, congrats to the industry. This is a very big deal and something that I believe is going to be talked about a lot over the next few months. We're going to see a bunch of updates coming out here and there. But yeah, I think on that note, I'm going to end the regulatory stuff there. Now, there's a couple other things I'm just going to drag here from my other tab that I forgot to bring up when I was getting the tabs ready. So I'm just going to drag these across here. And then, yeah, the next thing I'm going to talk about is the next big piece of news of the last 24 hours that you may have missed because of all the, I guess, SEC stuff, right? All the XRP and SEC stuff. The base mainnet is now live for developers. So it is live now if you're a developer to deploy your app there, to build your app on top of it, and it's going to be going live for everyone in early August. Now, I did mention yesterday that I did say that I expected Base to go live within 6 weeks. Obviously, that is quite a wide range, but if you take early August and say it goes live sometime, between the 1st and 7th of August, let's say the 7th of August, that is around 3 weeks from now. So technically I'm still correct because it is within 6 weeks, right? But yeah, I mean, this is actually coming a lot faster than I thought. I actually thought maybe towards the end of August into September, but yeah, it seems like early August for everyone this will be open to, but it is open for developers right now to deploy their apps on. This is pretty typical of layer 2s to do when they launch. Optimism did it, Arbitrum did it as well with Arbitrum 1, of course, and now Base is doing it. And I mean, the other ones did it as well, like ZK Stink and stuff like that, where essentially you want to get all the apps on there, you want to get the devs familiar with your ecosystem, and you want to have something for people to play with when your chain goes live, because you don't necessarily only have one chance to capture users, but obviously when you launch, you want there to be something to do. Like, for example, you don't launch a new supermarket without anything in it, right? You don't launch a new grocery store without any groceries in it. It's the same with these chains. You don't launch a new chain with nothing to do on it, unless that might be an approach that you figured was worth taking. Maybe you're in like a very early stage and you figured that it was better doing a development out in the open and then just slowly growing over time. I don't know if that approach is great, to be honest. I prefer the approach of getting the devs to deploy their apps onto whatever you've launched, and onto the L2 or a sidechain, whatever it is, right? And then opening it up to users, and then they have all of these things to play around with. Now, of course, we can expect similar apps that we see on other L2s to be deployed to Base here, including obviously the most popular ones like Uniswap, for example. But I don't know when they'll be deployed. I don't know if they'll be deployed during this phase or at a later date. I can't remember if Uniswap governance had already done a vote on whether to deploy this to deploy Uniswap to Base or not. But regardless, it'll be on there at some point, right? So we already know that. And it's not just Uniswap. Obviously, it's all the other DeFi protocols I'm sure are going to want to deploy there, along with NFT protocols as well, probably, and everything else. So just great to see that Base is going live at, as I said yesterday, the perfect time. Like, it couldn't be better timing right now. August, Base goes live. All the other L2s are live and thriving right now. They're getting better all the time. And then hopefully in October, November, we get EIP 4844 going live, dramatically lowering those fees. And then into next year, when, as I said yesterday, I expect the real bull market to start, we have a green field of cheap fees, fast transactions, huge economic activity, and lots of apps on these L2s for people to play around with. It really is going to be a magical time in the Ethereum ecosystem, I believe. So yeah, anyway. You can check out Base's post and Twitter thread here for full details on the launch. I'll link it in the YouTube description below. All right, another major announcement has come out of the Polygon ecosystem. So they have unveiled the new Polygon token, or the POL token, that will be replacing MATIC. So essentially, this is a token swap 1-for-1. So if you have one MATIC, you can swap it for one POL. This is not live yet. By the way, this is just a proposal right now. But essentially, there are a few key changes to the token here. So as I said, it's still 1-to-1. It starts off with a 10 billion total supply, which is the current total supply. And there is going to be a 1% inflation rate to validators in perpetuity, and there's going to be a 1% inflation rate to a community treasury that POL token holders will have a governance over. So total 2% additional issuance every year, in perpetuity. And I guess unless community governance changes that. And I think that's actually a pretty good idea, because 2% is really not that much, guys, when you think about it. Because there are a lot of other tokens out there that already do this. I believe Uniswap already does this, or with the Uni token, other tokens out there that do this. And it just depends what the token is being used for, right? Like if it's being used to pay validators in order to incentivize them to go on the network and to basically run the validators to secure the different networks within the Polygon ecosystem, which I'll touch on in a sec actually, then I think it's fair. And community treasury as well. Obviously, you want to fund the ecosystem. Obviously, you need to keep the funding up, because we all know what happens to projects that run out of money. They just die basically, right? So yeah, I think that's really cool there. And I should disclose here, you guys know I'm a Polygon advisor. You know that I hold MATIC tokens, and obviously I'll convert them to POL. So I just want a full disclosure there. Do note that when listening to me talk about this, and I'm trying to remain as kind of unbiased and unpumpy as possible, obviously just trying to give you the facts here. But what I find most interesting about this kind of token rebrand, I guess you can call it, is that in the paper that they there's a paper actually that you can find. I'll link it in the YouTube description below. In the paper where they propose this conversion, they talk about the POL token acting as basically this third generation token. So they say that BTC was a first generation token, ETH was a second generation token, and now POL is a third generation token, because you can use it to validate multiple chains or multiple L2s. So essentially, let's say you are a POL validator, you can validate the Polygon ZK EVM, you can validate the future Polygon ZK Validium, which is the Polygon POS chain, right? And you can keep opting in to validate on other chains as well, so any other kind of Polygon chains that get spun up, and then be able to earn that fee revenue by doing that, which I think is really, really cool, because you can't actually do that right now with native ETH staking, and you can't do that. And there is a concept of like merged mining in Bitcoin, but it's always kind of, I guess, like to the benefit of Bitcoin rather than anything else, and the economics aren't exactly there a lot of the time. Obviously, Ethereum is doing this with restaking, where you through Eigenlayer and maybe some other protocols that come out later, where you can do restaking and basically use your ETH to secure other networks. But Polygon with POL is doing this directly natively in the design of the token here, which I thought was pretty cool. But anyway, I don't want to go on too much about this. I want you to check it out for yourself. I'll link it in the YouTube description below. But just be aware that if you do hold MATIC, I think it's a 4-year period, you're going to have to change over to the POL token, which I guess is a very long time if you're paying attention here. And it's a pretty simple swap from what I can tell. It's going to be just a smart contract, but a smart contract that you would send your MATIC tokens to. The MATIC tokens would effectively be burned, and then you'd be issued 1-to-1 POL tokens. So if you burn 10 MATIC, you'll get 10 POL back. Now, in saying that, I believe that the centralized exchanges, if you store your crypto there, if you store your MATIC there, what they usually do is they do the swap for you, and they basically tell you the date that they're going to do it, or essentially they don't do the swap until you want to withdraw the token. So say you say to the exchange, oh, I want to withdraw MATIC to my Ethereum address. They might say, well, okay, we're going to convert it to POL, and then you'll have POL at your Ethereum address instead of MATIC. It's the same thing, it's the same token, but it's just this new POL ticker, right? So yeah, there'll be different ways to do this. So just keep an eye on it. But as I said, you have 4 years, or potentially more. I think 4 years is like the minimum to do this, but you obviously want to do it sooner rather than later, because it just becomes easier, because everyone's going to be talking about POL now instead of MATIC, right? It'll be confusing to follow both, and I think that most people will just convert as early as possible anyway. So yeah, you can go check this out. I'll link it in the YouTube description below for you to do so. All right, a new initiative that I came across on Twitter today was something called Bluechip. So, Bluechip is describing themselves as an independent, non-profit stablecoin rating agency. So, they said, "Hello world, today we're glad to announce the launch of Bluechip, an independent, non-profit stablecoin rating agency. Thank you to our advisors and donors for making this possible. We hope to make the stablecoin ecosystem safer and more transparent." And if you go to the website bluechip.org, you can see all the stablecoins that they currently have listed, and they have a bunch of metrics around these stablecoins, such as a grade, which I'll go into in a sec, the price, the current price of the stablecoin, its market cap, type of backing, so if it's got fiat backing or crypto or mixed, and its collateralization ratio here, as well as some other things. So this grade that they've given to each of the stablecoins, I think, is the thing to focus on, right? And you can actually, I believe, learn about how they do this grading by reading this thing called the Smidge framework, they're calling it. So you can check this out. I'll link it in the YouTube description below. But essentially, they're giving each stablecoin a grade based on this framework that they have developed. And in this framework, the word SMIDGE stands for stability, management, implementation, decentralization, governance, and external. So each one of those things has a bunch of properties underneath them, and depending on kind of where you stand or where your stablecoin stands, or where the stablecoin stands on each of those things, determines your grade here. And everything's detailed in this paper, which as I said, I'll link in the YouTube description below. But you can go down to the bottom and actually see the grading scale here and see how they come to these conclusions. So essentially, the highest grade you can get is an A+. This means that your stablecoin is very low risk in governance and management factors. It is asset backed, so it's fully collateralized. Reserves must be bankruptcy remote, and a very low risk in governance, management, and decentralization for on-chain stablecoins. So yeah, as I said, the best rating you can get, and then obviously F is the worst rating you can get. Now, if we look at here, I don't think any stablecoin currently has A+. The highest is A, given to 4 stablecoins. So BUSD, which is weird, I guess. And they have a note here saying that BUSD is actually, I guess, like being unwound, essentially. LUSD, Pax Gold, and GUSD, and then an A- goes to Pax Dollar, and then the rest of them are B or below. And USDD, which I believe is Tron stablecoin, got an F. So it's the only one who got an F. But there are a lot of Ds as well. Frax, Tether Gold, Tether, Euro Tether, and True USD have Ds here. And as I said, you can read the paper for the full methodology on this, but it's great to have something like this out there, I believe. I think we need this. We need to keep iterating on these sorts of stuff. We need to give more transparency around stablecoins to make sure that users know what's going on. And you know, it'd be funny if you listed UST, right, Terra's stablecoin on here, because I reckon that if you listed it on here in like 2021, people would have given it like an A or an A+, and then you list it on here in like the second half of 2022 and it's got an F. You know, these things can change. So we have to make sure that we are grading these things accurately and correctly, and grades can change over time, of course. It's not just a static thing. But yeah, as I said, you can read the paper for full details on that. I'll link it in the YouTube description below. All right, Sablier has announced the release of Sablier V2 today. So they're calling Sablier V2 a next-generation token streaming protocol that doubles down on our flagship lockup design. You can go to sablier.com to discover it now. So the main features of V2 is that they say here, it pushes the boundaries of Web3 payments protocols with non-linear streaming. So exponentials, logarithms, or any curve you want to do streaming payments. Every stream is a transferable NFT. Third-party UIs can monetize their Sablier integration with broker fees. That's really cool, actually. The every stream is a transferable NFT, because, like, for example, maybe you have a stream that you've got, and maybe you want to sell that stream. Maybe you want the money now. Let's say you have a stream, and that stream is going to pay you $10,000 over the next 6 months, but you want that $10,000 right now. Well, and someone else could basically give you that and buy your stream off of you for a fee, right? For some kind of fee. I guess like the fee would be determined by the market. But they'd be happy to wait those 6 months or something, or whatever it was, a year, I said, to get that 10,000, and then you get it straight away. So I think that's actually a really cool thing, and this is similar to something that like Flash Stake has done with their ETH staking yield and getting upfront yield, but this would be like an upfront stream essentially. And obviously different streams would be priced differently. If it's a stream in a stablecoin, it's okay. If it's a stream in ETH or something that's not stable to $1, it becomes a little bit of a different thing there. Maybe you can buy ETH cheaper as part of a stream because it's not going to get unlocked, right? It's got a lockup period, so you get a discount on it. Those sorts of things. That's pretty cool. But yeah, you can check out Sablier V2's full details. I'll link it in the YouTube description below. And yeah, there's a Twitter thread and a blog post and all that good stuff. There's a lot going on here. Huge upgrade for them. So congrats to them on getting this live on mainnet. All right, so the WenMerge website has released something called the WenMerge Block Proposer Schedule. It provides advance notice of a validator being scheduled to propose a block. Use this notice to make sure your validator is online and working correctly so you don't miss a block proposal reward. So for those of you who don't know, you are able to know ahead of time by, I believe it's like 2 epochs or something, or yeah, it's 2 epochs ahead of time, which validators are going to propose at which slot. So as you can see here, the current epoch block proposers are shown, and the next epoch block proposers are shown as well. And you can see all of them listed here with the validator numbers as well. So yeah, you can basically say. You can basically set up an alert, which you give a name to, you put your email address in, put your validator list in with a max of 10 allowed, and subscribe to alerts, and then it'll send you an email when you're scheduled to propose, so that maybe you want to make sure that everything's running smoothly so that you don't miss a block proposal. So a very nifty tool here. Do keep in mind, you don't want to be putting in an email address that can be tied back to you if you care about your privacy of your validators, because obviously it'll be linked to the validator list here, and whoever runs WenMerge or has access to that data will be able to dox you. So just a privacy kind of note there. But yeah, you can check this out for yourself, and you can just use an email address that's not tied to you to get around that. But I'll link this in the YouTube description below for you to check out. All right, Ion Protocol has announced a $2 million pre-seed round co-led by Portal Ventures and 7X Ventures here. Now, I will disclose that I participated in this round as an angel investor because I really liked the team. I really like what they're building, and you can learn all about what they're building from this Twitter thread where they've announced their raise, as well as basically coming out of, I guess, kind of stealth, right? But essentially what Ion Protocol wants to do is they want to build an entire kind of framework around staked ETH and basically issue CDPs against it. So the TLDR here is that Ion is a CDP issuer that enables users to deposit any validator-backed asset, including LSTs, restaking positions, and more, into Ion's collateral vaults and mint something called All ETH. So ALL ETH, not to be confused with the AL ETH product from Alchemix, which is an ETH-denominated stablecoin from their deposits. And then they go on and say, however, unlike traditional CDP protocols and lending markets in the DeFi ecosystem, we take a different approach to analyzing risk. It starts with the question, in a post-withdrawals world, what does it mean for a staked or restaked asset to be truly creditworthy? So essentially what they're trying to do is build a framework around, as I said, issuing a CDP or having a CDP and be made collateralized with these staked ETH positions, but also do it in such a way that not every position is created equal, depending on a set of different parameters for your creditworthiness of your validator or of your staked ETH, which I think is really cool. And that's why I backed them, because I'm like, you know what? We shouldn't treat everyone equally. We shouldn't treat every kind of like staked ETH equally, because some staked ETH is worse than others. There are staked ETH that is centralized and has centralization risk, and then there is staked ETH that is decentralized and doesn't have that risk. Then there is solo stakers, which has way less risk than staking services and things like that, right? And then there are market share risks as well. Like if someone has too much stake in Ethereum, that risk goes up rather than a protocol that has less stake, right? So all of these things kind of factor into it, and that's what Ion is doing here. They're taking all these inputs, and then they said here, using this information, we model the credit risk underlying validator performance, providing a more transparent and accurate method of underwriting this class of assets, which, as I mentioned, enables a ton of different things, such as being able to give these kind of like specialized CDP positions to people who may be a better validator, or so to validators, I should say, or to staked ETH that is more effective, more efficient, safer than others out there. And I guess it's a tough task to do this. It's definitely not something that's going to be easy, but it is definitely needed, because this is how the TradFi ecosystem works, right? When it comes to, I guess, like collateralized positions or just positions generally when you're borrowing and doing things in the TradFi system, we have a credit score, right? For better or worse, there's a concept of a credit score where essentially if you have a better credit score, you are more likely to get a better rate on your home loan or your mortgage, for example. And if you make more money, you are able to get a higher loan, right? So taking that logic and applying it to crypto, especially applying it to staked ETH and ETH staking generally, is something that I think is going to really unlock the next kind of level for ETH staking, unlock things for traditional finance people as well, and bring more of this kind of real world, I guess, way of doing things, real world TradFi way of doing things into the crypto ecosystem. So you can go check out Ion, for yourself. I'll link it in the YouTube description below. All right, so I missed this the other week, but Clr.fund R9 is now open. There is currently a $56,000 matching pool to be distributed to your favorite Ethereum public goods. And I believe it actually just got sweetened with another $25,000 from Gitcoin. So you can go here, go to the app and check out. But there is, so the total matching pool is 81,000 DAI, and there's 3 days and 10 hours left to contribute. So essentially, this is like a Gitcoin grants round, but it's like a mini round. Essentially, you can go on here and contribute to the different rounds. You can see here that you can add them to your cart and then contribute. There's different projects such as Ethereum Mexico. I'm just reading out random projects right now. Smoothly Protocol, which actually is a really cool protocol, by the way. Smoothly Protocol, what they're building is a way for solo validators to opt into a smoothing pool like Rocket Pool validators can, so that you can smooth out your validator rewards, which I think is pretty cool. ETH stakers here, a lot of familiar names you'll have seen before. But yeah, I'll link this in the YouTube description below for you to check out. It has been running for a couple of weeks now, but I forgot to mention it when it first happened, and I believe Tim from the Discord channel put it on my radar today. I don't know if it was Tim. I think it was someone else. I might be getting confused there, but someone from the Daily Gwei Discord channel put it on my radar. I believe it might have been Cody from Smoothly that did this. But yeah, too much happening today. My mind's a bit of a jumble. But you can go check this out. I'll link it in the YouTube description below. All right, so Ajna Finance that I mentioned yesterday was going live. They are now live. And just a refresher, Ajna Finance is a peer-to-peer Oracle-less, permissionless lending protocol with no governance. And you can check them out. Check out this Twitter thread, their announcement thread here. I'll link it in the YouTube description below. And just a disclosure again, I am an investor in them. Very proud investor, because I have been talking about Oracle-less protocols for a long time now on the Refuel, and saying how excited I am about them and how I think that they're actually innovating within DeFi. And that's why it gets me excited. But yeah, if you want to learn all about them, you can from this Twitter thread, and you can go check out the website for yourself as well and get started using Ajna. All right, I know I'm over time, but just to round out today's episode before we hit the weekend, I put out a tweet today that I wanted to talk more to. And actually, before I get into the tweet, just want to note that there'll be no Daily Gwei drive-through episode with Eric Connor this week or next week. So we'll be back the week after, because Eric is currently traveling. He's living his life like David Hoffman, right? Climbing mountains. And speaking of David, actually, I was on the roll-up with Ryan again, so you can go check out the Bankless roll-up after this if you want. But yeah, there won't be anything with Eric for another couple of weeks, just to note there. But anyway, back to the tweet. So I said in this tweet, pro tip for the bull market: don't get upset because someone else has made more money than you from crypto. We're all running our own race, and comparison is truly the thief of joy. Just enjoy the ride instead of coping over things that have no relevance on your life. So the TLDR of this take is basically, or the way to think about it is, say you're on Twitter and you see someone posting their P&L or profit and loss kind of screenshots from exchanges, and say you see some of these trader accounts that are slinging millions of dollars, and you think to yourself, wow, this guy just made $1 million from this recent pump, and here I am making like, I don't know, whatever it is, like a few $1,000s, something like that. Yeah, okay, there's a big difference there, don't get me wrong. But your situation and their situation are completely different. Their life has no bearing on your life. What they do does not affect your life at all. And the amount of money they make or don't make doesn't affect you. The amount of money you make or don't make doesn't affect them. So there is literally no point comparing yourself to them. There is no point even thinking that you have to be like them or that you're doing worse because they're making more money than you. At the end of the day, we're all, as I said, running our own race. We're all doing our own thing. We all start from different places. These traders doing these $1 million P&L screenshots, they probably built up a base from a much smaller base where they started from, right? And probably did it over many, many years. They probably blew themselves up a bunch of times as well. Whereas maybe you've just got into crypto the last year or so and you've chucked in what you can, and then you're kind of getting FOMO. You're like, oh my God, I'm not making enough money. Oh my God, I should have bought this because it pumped more than this on this day, blah, blah, blah. That's not how to invest. And I'm not in the business of giving investment advice or anything like that, but really, if you're a long-term investor, you shouldn't be concerned with this stuff. And you shouldn't be concerned if a coin that you're not invested in has pumped more than one that you are invested in on any given day. Obviously, it matters more over the long term because, as I've said before, if you're not outperforming ETH as a benchmark asset, then you're kind of like, you're not doing it right, so to speak. But at the same time, you're not always going to outperform ETH. There are going to be assets that you buy that don't outperform ETH. There are going to be assets that you buy that don't even outperform USD by the time you sell them. This is all part of learning how to be a good investor. And those people that you see slinging millions of dollars, most of the time have already learned all of these lessons. If they've, especially if they've started from a lower base. Obviously, the bigger guys who come in, they've already got money because of TradFi, they have a company or something like that. Don't worry about them either because, like, legitimately you are completely different to them as just a normal retail investor. But if you're comparing yourself to just another person on Twitter who's bragging about how much money they're making, which to me, I'd hate when people do that, to be honest. I guess like it's just an ego thing for people. But again, like it has no bearing on your life. It doesn't matter. Random coins pumping more than your favorite coin that you invested in on any given day, pumping more than your coin doesn't matter either. If you have a thesis and you're sticking to it, and you understand that you're gonna get such and such return based on such and such outcome, then that's the better way to play it. And on that note as well, don't compare large cap assets to small assets. I see people doing this all the time. They say, "Oh, ETH only went up like 2x, but this random coin that has a tiny market cap of like $50 million went up 10x. It's like, yeah, because ETH's market cap is like $250 billion. Or if it went up 2x from 125 billion, that is still way, way higher than 50 million. It takes a lot more money to move ETH than it does some little coin. Now, picking that little coin and picking the right one and holding it for a 10x is also a whole nother thing, right? Because you might sell on a 2x because you'll be like, oh, well, this coin is actually useless and worthless. Why is it even pumping? I'm going to sell it at 2x. And then it goes to a 10x and you regret that, right? So this is why investing is just so difficult. Trading even more so. It is not a game for the faint of heart. But at the end of the day, you should be happy if you're making money no matter what. As I said, like I measure against ETH, honestly. But if you're just measuring against US dollars, you don't care if you don't outperform ETH. That's okay too. You don't have to outperform ETH if you don't care about that. If you're outperforming US dollars and that's all you want out of the ecosystem, you just want to make some money, take it out, and then pay off some of your mortgage, buy yourself a new car, pay off some student loans, whatever it is for you to do. That's totally fine. You still made money, right? So yeah, don't compare yourself to other people. Be happy with what you've got. You made your own decisions. No one forced you to put money into something or sell here or buy there or whatever. You did what you did, and what other people do have no bearing on your life. So yeah, anyway. On that note, I think I'm going to end that for today. So thank you everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give it a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all next week. Thanks everyone.